Well, happy Monday. It's August 21st. I want to bring you the latest data here in the Austin metro area. We're going to start once again, with interest rates. They went up again this last week. The 30-year fix now sitting around 7.37%. If we look at the headlines, multi-decade highs on interest rates. And I'll show it to you in a chart, at least over the last year. So here's the 30-year fixed rate mortgage rate. If I go to the high point of last year, 7.37%. We hit that in late October, and then they kind of went down through the winter. We had a big spike up before the Silicon Valley Bank collapse. Then they came down back into the mid sixes for a good chunk of the spring market. And since then, they've just gone up, up, up. And we've been mostly over 7. And here we are, 7.37% once again. So we are at the highest rates we've seen since the Fed started raising their interest rates. I'm going to show you in a chart here in just a second. When was the last time we saw rates that high? I'm going to switch over to here. So Keller Williams had their Mega Camp conference last week, and this is some of the national forecast data that was shared with all of us. So this is looking at home sales annually. This is national. Our dotted line here is the projected level for this year, okay? Because we haven't finished this year yet. But they're projecting about 4.3 million in total sales in the U.S. The last time we had levels that low was back in the last recession in 08 through 2011. And then before that, you go back to the 90s. But of course, America was smaller back then. We had fewer homes to sell. And so it was more typical to have lower numbers. But of course, right before the last recession, we saw a huge spike in home sales. And of course, you can see the peak was about 6.1 at the top of the pandemic. So this is a look at last year and this year. Last year is the purple, and this year is the mint green. And you can clearly see every single month we've had significantly lower sales as a rate. And so we're just seeing much lower sales this year than even we saw last year. Interest rates are playing a big role in that. And of course, fewer sellers as well. There's not as many sellers in the market. And you can see that here in the numbers. So this is looking at pricing annually. Okay, so this is what everybody likes. We call it appreciation. So typically we've averaged about 4%, and that's what this green trend line is. We got ahead of that before the last recession, and then the market slowed down. What also changed were lending standards. And so after that, we had a much more, nice, gentle rise until we got to the pandemic. And then it went crazy again, and we launched way above the trend line. We're still about 7% of nationally above that trend line. I think the trend line is going to catch up at some point, but it looks like it's going to be in 24 or 25, assuming home sales flatten out. So that just gives you an idea of where we are right now, why buyers are bumping up against that affordability ceiling. And it may take a year or two before we balance that back out. I'm going to come down to mortgage rates. We talked about this. So this is what it looks like if you go all the way back to 1972. The dotted line is the average of all of these years, 7.81%. Now, where did it change? If you come back into the 90s, that's about where the average rate was. Before that, in the 80s, you had huge interest rates. And after the year 2000, you had very historically low interest rates. Well, this chart, when they put it together, it was 6.6%. We're now sitting about closer to this one. We're up here probably about 7.37%. Last time we had that rate was in the year 2000. So for buyers and sellers, you have not seen these rates for almost a quarter century. And so it's going to take a lot of adjustment for the market to get used to these rates. Even though we've been at those rates typically for, a couple months, it's going to take a while for pricing to adjust, for buyers to adjust, to have this become the new normal. Literally, I have clients that were probably born in the year 2000. Not only have they not seen that rate, they haven't been alive since that rate was last in the market. So that gives you an idea of how long it's been since we've seen rates this high. All right, I'm going to switch over and show you the July statistics. These came out from the Austin Board of Realtors. Obviously, I've shown this to you in some other versions of charts, but they're showing that we're sitting around 462 is the median home price. We peaked out, I think, around 475 over the summer. Compared to last year at this time in July, we're down about 10% for the market. Obviously, days on market are way up compared to last year. And months of inventory continues to climb as well. And let me show that to you in a different chart. So this is current data as of right now this morning. So this is the number of active versus sold listings, and I've shown this chart before as well. So active listings are the ones in green. So for the month, how many total active listings did we have? And then the blue is sales, actual closed sales. And so if we look at the green, we peaked this year in June. We had about just under 11,000 homes, single family homes for sale. We've seen it just ever so slightly tick down. We're sitting around 10,800 right now. What's really changed is we peaked out on closed sales in May. We had about 3,400 sales, which means those were your March and April buyers closing in May. But since then, obviously rates have gone up. The summer season has slowed down. So in June, we had about 3,200 sales. Okay. But by the time we got to July, it dropped big time. We're down to about 2,700 sales in July and August. We still have a couple more weeks, but I predict we're not going to be much better than 2,700, and we could be lower. So what we're seeing is even though the inventory is slightly coming back down, the sales are coming down even faster, meaning fewer people are buying. And actually that's allowing the inventory to build up. So even though we don't have as many homes for sale, we have that many fewer buyers buying. So the months of inventory, the pace at which things will sell is actually slowing down, which means there's more months it's going to take to sell a property. So anyways, that's a lot of data. I hope it was helpful. If you want to follow all of this data, you can check out Ryan Kelly Group on YouTube, and you will see all of our weekly videos there. You know, I think with the hot temperatures, with the high interest rates, our market is going to continue to stay very slow. We may have a fall market that is not like the spring market, but we might have a few more buyers. We're already starting to feel the pre-quals. We're having some of our clients want to go out and do tours now. So I do expect we're going to have some more buyers come out in the fall, but it's not going to be a lot. And it's going to be a slow process because there's not a lot of urgency in the market to buy a home right now. So you got to stay patient. If you're a seller, you got to have a really accurate and aggressive list price to get enough buyers in the door to make you an offer. And if you're a buyer, work with your lender and find out what kind of programs, what can you do to help make this process smoother so that you can get a property and get financed with that loan. Anyways, I hope this was helpful. You guys enjoy your week, follow our videos, and we'll talk to you next week. Thanks.